All right, hey everyone, welcome to this private Q&A for Saturday, June 19th. Hope everyone is having a good time. This will go public tomorrow. And keep that in mind. It'll be posted to the YouTube channel. I got one question off the bat, and go ahead and throw additional questions in. I will go ahead and mute people for now. And if you want to ask that question, some reason can't mute one person. That's weird. If you want to ask a question without typing it, you want to raise your hand, and I will go ahead and call on you. Okay, question. I was curious on your perspective on shorting Bitcoin to hedge your hodl position during certain times versus selling and buying back to avoid short-term capital gains rates. That is correct. Selling and then buying back will incur tax liabilities. Scenario one could be when the bull market is getting extended. Let's say your price target is 150,000, being fully hedged at the price would lock in your USD but decrease your Bitcoin amount if price continues up. If and when price goes down, this would lock in your USD but increase your Bitcoin amount. Well, that's what the futures market actually does. So if you wanna go and find that video that Ugly Old Goat and I did in June of 2019, when the price of Bitcoin was spiking to 14,000. I want to pull up the chart of that. So if we go back, I'm using the weekly chart here. So on a weekly scale, on this week in June, right here, on this week, around June 19th of last year. Wow, exactly 2 years ago to the day. I need to go to the daily chart here. That's June 26th. Okay, yeah, June 26th, right there. On this day right here, June 26th, Ugly Old Goat and I did a stream where Bitcoin futures 3 to 6 months out were selling at like $800 above the price of Bitcoin. That is how miners and commodity growers hedge their positions. So you would sell a future against your Bitcoin, and you have to deliver that Bitcoin, on expiration day, which could be 6 months away. So that's what you would do. You would sell it. Now you could do this with no leverage, if you want, and you can sell it at even $600 more, because at this area we had huge contango. I believe it was contango. And I always get contango and backwardation confused. So you can sell the future at an even higher price than the current price. And then if the price goes down, you earn more Bitcoin, because the futures markets in crypto are Bitcoin and Bitcoin only. And if they go up, then you just give up those Bitcoins in your futures contract. Now, futures contracts are marked daily. So every day you see your total account either decrease in the number of Bitcoin or rise in the number of Bitcoin based on what the price of that future is. So that's exactly how you could be doing. That's exactly how you could be hedging. And though technically that's active trading, and if you earn more Bitcoin, that does take on short-term capital gain. Now, the other thing you could do is sell an option against that Bitcoin. But let me finish reading your question. So if you were able to start hedging at that point and believe in another bear market, you would lock in your USD and obtain more BTC versus just selling and buying back or hodling through the bear market. Okay, so that, yes, that's what I just explained. And the other thing you could do is you can sell the option. You could sell a call option against it, in which case, if it keeps going higher, then someone will take your stock at a higher price, or your Bitcoin at a higher price. Or you could buy the put option, which is insurance. So buying the put option is like buying insurance, and you don't have to sell the stock. You buy the put option, and if the price of Bitcoin goes down, then you could sell that put option going into expiration or a few months later and acquire more Bitcoin from that put option. Or you could let your Bitcoin go at the price you sold your put option on. But if you're going to trade options, you need to really understand what the hell that means. And that's why there is a full options course in the on-demand video section, and it's 3 days long, and that's why it's $2,500. I got stopped out of my previous short position from 37,000 and re-entered on a swing failure pattern at an average of 40,800 in between the last Q&A and this one. Let me go back to the chart. So, trying to see where you stand. Yeah, that sucks. So you shorted at 37,000, which would have been either here, which I hope you didn't do because that's a weekly MRI buy, not the best time to go short. So it could have been before that, still not the best time to go short. So it had to have been before that, which means you didn't take profit. If you did go short right here at 37, it's a good lesson not to, fuck with the MRI on a weekly scale, because this is what happens on this candle. So now you are short with an average of just under 41,000. That's pretty damn good. That means you shorted this top here. That's really good. That means you shorted that wick there. That's great. Prices I'm watching for a potential reversal or breakdown are approximately 34.5, 33 and a third, and 31. So let me see where that is. So 34.5 is here. I don't see 34.5 as, well, it's a weekly chart. No, daily chart. I don't really see much, but you're right. I did say it in my video. I am looking for this area to kind of bounce the price back up, but I don't think it'll go back to 41. It's possible, but unlikely. 33.5. Well, that's almost the same thing. And then 31. I'm not really looking at 31. Like right now, what I would be looking at is an MRI buy. If I get an MRI buy, which we didn't get here. Remember, I was hoping we'd get an MRI buy here at 28,000 within the weekly MRI buy, and then I would be big time long into the death cross. So that would have been sweet. But now I would be looking for a nice MRI buy, even lower than 28K. So I do think that we could take a bit of a nasty spill here in the near future. Am I correct in assuming this is a hold and wait at these levels? Well, the exchange doesn't really matter. Yeah, if I was short off of 41, I would hold the short for now. I would not be rushing to take a profit. I would hold on to that short. I would, however, take the stop loss at 38K. So I would set my stop loss to 38K. I would now not want to risk the break of the prior swing candle's high, maybe even, a little bit above that candle. I would set a stop loss at say 37,000. That could be a decent profit there. And then if we rally into the moving average, if we rally back about 40, that creates another potential short. Yeah, your stop loss at 37.8. That is a little bit higher. Oh, no, wait, 30. Yeah, that's good. Yeah, anywhere between 37.5 and 37.8 is a good stop loss. I like that stop loss. Do you consider the depth cross only as the perfect shorting opportunity when a candle directly rallies into it, or also when it's far away from direct vicinity? No, I only consider a depth cross a shorting opportunity if there is a candle inside this circle. Now, this circle is, of course, subjective, but this is my circle. So if the price was in the circle, I would consider that a shorting opportunity, especially if it had an MRI sell on it. We came up a little bit shy. Now, the MRI sell could have been the shorting opportunity as well. But as far as the depth cross is concerned, I need it to be in the circle. Do you only consider the simple moving average or also the exponential for the depth cross? I use simple moving averages, to each their own. There is an infinite number of moving average parameters, and there's two types of moving averages, exponential or simple. To simplify my life, I prefer the simple moving averages. I know you are bearish the dollar, but considering euro possible head and shoulders forming, would that change your macro view on the dollar? No, my macro view of the dollar has nothing to do with the technical chart of the dollar. My macro view of the dollar is that I think the United States is going to be deteriorating over the next decade. So it's more of a fundamental thing, not a technical thing. Do you still think 30,000 is the low or more potential for downside? Okay, so that's a really interesting question. I do not think 30,000. Oh, 30,000 is not going to be the low the second time. So it's hard for me to say if 30,000 was the low, but it's easy for me to say that 30,000 will not be the low again. If we get anywhere near 30,000, we're going lower. And if we stay above 33,000, we're not going to hit 30,000. So I don't know if 30,000 was the low or not, but I'm very confident it won't be a low for the second time. Not everything is answered by TA. What do you think about El Salvador not getting help from the World Bank in adopting Bitcoin as legal tender? Will El Salvador be able to pull it through without that help? They should do it. Here's the thing, right? If you need the help of the IMF, you have a problem. IMF is a mob boss, as I explained on a different private Q&A. IMF and the World Bank is the mob. If you implemented something in your business, but you can't actually implement it without the help of the mob, why the fuck did you implement it? Okay, so if El Salvador can't implement Bitcoin without the help of the IMF, then what the hell are they doing? Then why did you implement Bitcoin? The reason you implement Bitcoin is so that if the IMF tells you they're not giving you any help, you can blame the IMF saying, fine, we'll do it on our own. Okay, this is a way to get out. It's the way to get out of the IMF, not beg for IMF's help. I mean, I'm very disappointed in El Salvador needing the help of the World Bank or the IMF to help with Bitcoin being legal tender. You insane. Absolutely. And that pisses me off. And by the way, according to the rules of the World Bank, they have to help them and they have to accept Bitcoin. But those rules are going to change like tomorrow. Another good question. Do I think we're going to break 30,000 on the first test or bounce off of it? It all depends on how quickly we get there. If we get to 30,000 real fast, we're going to exhaust the move. If we get to 30,000 on an MRI buy, I'm going to expect a bounce. But if we get there very, 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 very slowly, I'm going to expect it to just fall right through. So it's about how we get there, not the number itself. How much cash do you think a portfolio should be in? That's a too subjective of a question, right? It depends. Is your portfolio Bitcoin or cash only? Then that portfolio should have a decent amount of cash right now. Is your portfolio open to global assets like gold and stocks and bonds and Bitcoin and real estate? Maybe it should probably have very little cash. There's always other assets that are investable. See, miners that are already functioning are looking for a home out of China. So I think Canaan will do fine because Bitcoin is still expensive and mining a Bitcoin is still fairly cheap. What general percent would you give 20 to 22,000 if Bitcoin breaks 30,000 on a closing basis? I would give it a good 25 to 30% chance that if Bitcoin breaks 30,000, it can make it all the way down to 22. But most likely, it's not going to go below 25-ish. Judging from current chart structure, do you expect us to hit 30,000 faster or slower? What would accelerate or decelerate the downturn? I think we would hit it slower than faster. What would accelerate the downturn? I don't know. More tweets from Elon? I have no idea. Have you ever attended one of Michael Saylor's presentations to potential investors? I have not. What are his main points in convincing them to go into Bitcoin? Look, to be honest, I have not heard many interviews from Michael Saylor. I've heard very few interviews from Michael Saylor. And the reason I have heard very few interviews from Michael Saylor is that I'm on the same page as Michael Saylor, right? Like me attending a conference where I'm listening to myself is not going to teach me all that much. So people that should be listening to Michael Saylor are shitcoiners and no coiners. Michael Saylor is great, but like I'm sure Michael Saylor has no reason to listen to me because I have nothing to teach Michael Saylor. We're already on the same page. So I have not heard too many of his interviews. So this is the Tyler Jenks Consensio chart. Hey, Mark, what moving average parameters am I looking at? Like, what are these in order? I'm assuming this is the weekly chart. No, that's definitely the daily chart. No, it is the weekly chart. So I'm assuming that's the 2-period moving average, which I still don't understand why Tyler was using it. If you can type in what those are, or you did. Okay, top 3 are Consensio. Right, but it's been so long. Like I really have to review Tyler Jenks' Consensio. And by the way, for the financial summit, I should probably highlight this. When you register, you get over $9,000 worth of proprietary content. And well, I know a lot of people don't like Four Flies, but he also has like a $3,000 educational video that you guys will get. And I'll probably convince Willy Woo to give out like a 6 or a 12-month subscription. Like I want this, what's included, like to be like $15,000 to $20,000, and this is before you even attend the beautiful resort. So Tyler's Consensio will be given to people that register. That's the webinar. 3, 7, and 30. Was that really his Consensio? 3, 7, and 30? Okay, that's a little bit tight. That's a little bit tight. I'm surprised. So 3 is going below 7. Oh, no, I'm sorry. The 3 is the red one there. I didn't even see that one. That's one Consensio crossed. So that's 3 below 7, and this one is the 30. And now we're going below 30, and the big ones are 200 and 377. I'm not exactly sure about the 377 or the purpose of it. You might have to explain that one to me. So red is, hey Mark, you don't want to use red because it blends in with the candles, because half the candles are red. So it's very challenging to see the red moving average. You really want to go with like, I don't know, an orange or a purple or something. So yeah, it's not looking good, is it? It's I don't think we're gonna go all the way to the 200. I really don't. I don't see us hitting the 200. The 200 should also start kind of rising fairly quickly. It's the 200-week moving average, so we're talking 200 weeks back, 52 weeks a year. So that's 4 years back. It's not good. So this is 2019. Yeah, we still got a full year to go with this in the moving average. So you want to be, it's 2018, sorry. This is early 2019. So when we hit 2022, nope, that's 2018, 19, 20, 21, right? So when we hit 2022, we're going to knock out 2018. So it'll be 1, 2, nope, we're not. We're still going to be using 2018. Yeah, that moving average ain't going to be rising fast anytime soon. It's just not. I don't think we're going to hit it, though. I really think worst case scenario is the prior swing high. Do you personally consider it easier making money in a bull or a bear market? Oh, bull. Of course, it's way easier making money in a bull market. For me, it is. Others love the bear market. Is the market cipher crypto face? Yeah. Crypto face attends the event. By the way, all these people like Da Vinci and like all these people like Da Vinci and Joe Saz and Crypto Face and Four Flies, they're paying attendees just like you, just like everybody else. This event is different because the expense of this event is really high. So the majority of this $9,000 is spent on you. It's spent on you, and you don't recognize that until you're at this $1,000 a night resort for 6 nights. So, and then there's more, right? Then there's the food, then there's all this other stuff, organization. So the majority of this money is spent on you. So people pay, but they're nice enough to provide their proprietary stuff to the attendees, to all the attendees. I'm so capitalistic, but at this event, everyone is equal. Like Da Vinci and Crypto Face and Four Flies, they're not treated any differently than people that no one's heard of at this event. At this event, everyone has the same opportunities. Oh, okay, so the drop from here to here dropped to the 144 exponent from 19,000 to 6.5. This one here. Okay, good to know. Yeah, it caught the wick of the COVID drop, but there's no historical relevance to it. So I don't know. I don't know about that blue one. Yeah, it's more of a symmetric triangle to me that just broke down, but I don't like this little drop here. Not really a descending triangle to me. Yeah, in spirit, it looks like it. After watching yesterday's Four Fly session, please don't go down the clickbait road. It's so annoying. On the other hand, it's completely beyond me how he gets more views. His views are legit. His views are legit. Carl's views are legit. MM Crypto's views are legit. And BitBoy's views are legit. He's crushing everyone. He's getting like, I don't know, 200,000 views. So, like I said, they're doing something right. And that something is knowing how to get people to watch their videos. They're doing a lot of that right. And that's why it's very difficult for me to compete for that. They're good guys. They're coming, by the way. I mean, they all live in Dubai, not BitBoy. But Carl and MM Crypto, I don't know if you guys. I know a lot of my audience don't like them, but they're good people. They're not bad people. They're not creating shit coins. Well, I recently learned that Da Vinci actually is. They're really good people to hang out with, and because I'm in the crypto space and everyone is like printing their own money in the crypto space. I mean, I look, I already have no freaking friends in this space. I have like maybe 20 to 30 friends in the space because I piss everybody off because everyone's a scammer to me since they all print their own money. Yeah, so Carl plans to attend because he lives in Dubai, plans to sign up for the financial summit. MM Crypto, if he's in town, will probably attend. It'll be a fun event. It'll be a fun event. I do try to keep it serious, though. It's not like we hang out, we party at night, we play poker, which will be challenging to do in Dubai. We'll see. I'll do my best. Large hedge funds are accumulating at above market in major cities for rental purposes. Maybe a good idea to explore a longer term rental if the demand in your area. Yeah, I can easily get a rental. I can get the rental. It's a consideration. I don't really worry about head and shoulder patterns. Weekly head and shoulders on Bitcoin. Let's see. Yeah, you're considering that to be the left shoulder. That's the head, and that would be the right shoulder. I think the head is a little bit too big and drawn out. And this is a little too small to be a left shoulder. Because look at it on a daily chart. Like it just looks weird. So I don't really see it that way. All right, now it's time to get to stochastic RSI. Let's pull it up. I always default to daily charts. There's the stock RSI. So the stock RSI, you have two parameters here. You have the cross and you have the break of the zones. So right now, the stock RSI is telling you, you should be out of the long position. Just not a huge fan of it. I do explain it in my educational videos, but I don't trade it that often, so I tend to have to refresh my own memory because I never ever use it. So I go like 6 months without using it, so I have to, review old notes and how I learned it. And I do like the fact that the funding rate has been favoring the bulls for a while. Nice long consolidation. Look at the last time we had this consolidation. And look what happened next. And that kicked off November 2020 right there. So I'm liking that. I'm really liking that. Also liking how the RSI has been slowly rising on a daily chart. The MACD has been rising on a daily chart. I mean, these are all good signs for a near-term breakout. But the moving averages are more important. Just more important. Also, here in my Learn Trading section, go down to oscillators and click on stochastic RSI. Where is it? I have the stochastic stock RSI right there. So you have your main link is right there. It teaches you all about it, how to calculate it, how it's used. Very good resource. And then there's additional resources here. Difference between its two components, the RSI and stochastic. Click on that. You know, another resource here. And then you have more resources here, here, and here. So you can start clicking on those. More stochastic RSI from Investopedia, from commodity.com, and from Fidelity. Okay, so I took a lot of time looking for decent, you know, simple resources for education. So anything you need to know, just go to the free tutorial. All right, guys, I think it's time to call it a day. Let's I guess since this is going to go out tomorrow, I might as well promote a little bit. We have the conferences. Obviously, I already talked about the financial summit. The MRI is right there, products and services. And this Q&A should be open to the public soon, probably $500 for the rest of the year. And I'll try to do 2 to 3 a week. All right. Thank you all so much for hanging out. Back to the camera. And talk to you all on the next one.